Tesla has just increased the Model Y rear-wheel drive price in China by $300 roughly. You can see the price history here right now. It is at this price. Just about a week ago, Tesla did increase the prices of Model Y in the US by not a large amount. It was about $1,500 for the Model Y long range. And it's almost like there's more demand. The inventory decreased quickly. It's now effectively zero in the US. Maybe we need to scare them a little bit and let them know, hey, look, we're done the price cuts now. If you want to buy one, and if you're waiting for a price decrease, you gotta buy now. James certainly thinks that. He thinks it is just to generate fear of missing out. The price increase is so tiny that I don't think it makes much of a difference. So that theory that Tesla is just doing it to get more orders, actually, I think it's pretty plausible, but still, I think it's less likely than Tesla actually getting a good amount of orders and Tesla wanting to avoid a buildup in the wait times. From Drive Tesla Canada, Tesla Model Y claims second spot in China's premium SUV segment in January. And it's important to know this before you hear any bears exaggerate what is actually going on. After claiming the title of the most popular premium SUV in China in 2022, Tesla has started off on the right foot to claim the title again in 2023. So it was number one in 2022. Here is incredibly important context. The difference is only a few hundred vehicles. It's not even that. Very few vehicles. However, last year in January, the difference was quite big. The next important thing you have to understand, even though you may look here at 2022 January for Model Y, you will see, oh, this number is bigger. This year in January, we sold less than last year. This is bad. Well, the Chinese New Year last year was in February, so we had a long period of time where the factory was shut down. When you look at that image, that is one big reason why every single model is basically down from last year during the same period. But Tesla is not down that much. I mean, look at this one, for example. 17,000, now it's only 6,500. That's a big drop. Here's more good news in the US. Tesla just dumped a whole bunch of 4680 Model Ys that have structural battery packs and gigacastings in the front and the rear. So therefore, if we switch to that Model Y, eventually the margins will be quite a bit bigger. This is what we want to see. You can go to the Tesla website and configure that in the exact configuration you want. You have to wait for that vehicle to be available in inventory. So Tesla dumped a whole bunch of those, and Tesla does that regularly. And people really like buying them. The inventory is going straight down. This is hour by hour, basically. Here are side-by-side comparisons. This one has the 4680 structural battery pack, and this one is just the regular Model Y that you can get on Tesla's website. So you can see this one is a tiny little bit faster, but this one, the regular one, the one that does not have a structural battery pack, does have more range currently. But when you look at the price, the 4680 one is about $4,000 cheaper. Also, both vehicles are all-wheel drive. I would say if you do not go on road trips at all, or maybe just once a year, I would suggest to go with a cheaper one. But if you do go on road trips multiple times per year, I would only go with the one that has longer range. Jason, who has a lot of money in Tesla stock, has a very good point. Waiting for a pullback in Tesla stock is way riskier than buying on a run-up at 50% of the all-time high. I'm not entirely sure, but I think the reason why he tweeted that is because of Zero Sum Game, who is very interested in the mega packs, but he did sell most of his Tesla stock recently. And more good news, it looks like Tesla is on track for a new record quarter in Europe. This was the last quarter, and you can see how much better the last quarter was than the previous best quarter in Europe. And this is where we are right now. As you can see, only right around this time, last quarter, we saw some deliveries. Now we are way ahead already. This is huge proof that Tesla is no longer committed to the delivery wave at the end of the quarter. I think Gary misspelled his tweet here. I think he might have meant to say, instead of Super Bowl EV ads, I think he meant to say Super Bowl Tesla ads, which basically show you how bad all other EVs are. And for example, you go to the BMW website or the Mercedes website or any other EV manufacturer, and you look at the specs, and then you go to Tesla's website and like, oh, no way, I'm buying anything except a Tesla. While I believe Tesla stock is still incredibly cheap, things are starting to make a little bit more sense because Chipotle now is at a PE ratio that is lower than Tesla. Here's another way to compare Tesla with other automakers. Operating profit per employee for major US auto manufacturers. As you can see, there's no real comparison. Tesla is multiple times better than Ford for, well, at least in the year of 2022. And Tesla is twice as efficient when we compare it to GM. It is really difficult for me to understand how people can make such silly mistakes. These Tesla price cuts have, in my opinion, completely de-risked the fundamental bear case. I actually just added significantly to our short position at $116.99 after previously intending to leave it in rundown mode, as I think this confirms another 90% downside for the stock. Wow, some people just never learn. There's a new note from Morgan Stanley, Tesla over $200, too much too soon? No, it is not too much too soon. In fact, looking at the long term, Tesla stock is still widely undervalued is what I believe personally. Tesla stock trading volume is quite high. It is 804 billion versus 525 billion. This is basically comparing 27 days before the end of a year, and these are 27 trading days year to date. They are saying that there are less clients that are interested in buying Tesla stock now compared to before. In terms of competition, Morgan Stanley compared what Tesla is doing to what happened about a century ago. A similar shakeout occurred in the auto industry over a century ago. This is in reference to the price cuts and Tesla's economy of scale. At just over $200 per share, Tesla trades at 21 EV EBITDA. When we look at the year 2025, this is based on Morgan Stanley's numbers. And of course, when Tesla was at $100, it was 10x the 2025 EBITDA. That's just beyond ridiculous. Morgan Stanley is excited about the Master Plan 3 unveiled on March 1st, Investor Day. We are excited about the progress that Tesla is making on the GigaPress, both front and rear GigaPresses. Then 4680 battery packs, structural battery packs, and other innovations. Morgan Stanley reiterates the overweight rating, meaning buy Tesla stock. They say, we believe the window of opportunity on valuation has closed. I don't really believe that. If you have a long enough time horizon, short term, if you trade Tesla stock, that might be true. Further, upside from here will require a more substantial narrative change following the March 1st investor day. Wall Street is always behind. At the same time, we remain concerned about the ability of EV competitors, startups, and legacy players to withstand the cost and scale advantages Tesla enjoys as it continues to drive prices lower and share higher in a potential shakeout for the EV industry. Good news for Tesla stock, and this is the buying opportunity for Tesla stock explained by Elon Musk. My name is Matt Post. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.